Uh, Today we are going to discuss some vital issue, some vital issues on basic accounting related issues. Just this presentation session on basic accounting related issues. Now we move to slide. First on define accounting. Accounting is an information system that identifies, records and communicates the economic events of an organization to interested users. Basically, here 3 points. Number 1, identifies. Second, records. Third, communicates. And these 3 points collectively we call this is the activities, accounting activities. So accounting consists of 3 basic activities. That is identifies, records and communicates the economic events of an organization to interested users. That means later on we will discuss on economic events of an organization. That means we know every organization keeps the accounting record. Personally we call it, this is the accounting index. That means personal index, but the personal index we will not consider here, just we will consider here organization. And to the interested users, we have some interested users here. We call this is the internal users or external users. Later on we will discuss them. So accounting consists of 3 basic activities: identifies, records and communicates. So these 3 basic activities, first one, identifications. Thus identification selected economic events. Later on we will discuss on selective economic event. That means our next slide. And recording, that means record, classify and summarize. So record means that this is we call the journal entries. By using journal entries we will record these transactions. And classify, we call this is the ledger accounts. And summarize means this is also the trial balance we call. So and next on communication, just here we prepare the financial statements or financial reports, and the reports must be interpret and analyze and interpret for the users. Okay, so these 2 parts, that means identification and recording part, we call this is the accounting process, includes the bookkeeping functions. And this on communication, this is the accounting function. This and here economic events. Now we discuss on economic events. So here 2 points. A company identifies the economic events relevant to the business. So here sales of cheese puffs by the Akis Food and Beverage. This is sales. We call it this the sales revenue. This is related to amount or taka or dollar or economic events. And number second, payment of salaries by Uttara University. Uttara University payment salaries to its vice to its employees. We call this is the payment. That means cash payment. So we call this is transactions, or we call this is the economic events. Or credit purchase. Later on we need to be paid, but now we have purchases on credit. So we call this credit purchase also economic events, and credit sales also economic events. Okay. And now recording consists record. So recording consists of 3 points. Keeping all records in systematic manner, and it must be a chronological order, and this measures in taka or dollars. Okay, so it records these events in order to provide history of the financial activities, history of its financial activities. Now communicates. Actually here 3 activities of accounting: identifies, records and communicates. So here communicates this, and finally the company communicates the collected information to interested users, okay, by means of accounting report. So this accounting report we need to be analyze and interprets this accounting report. And most common of these reports are called financial statements. Okay, here income statement, owner's equity statement, balance sheet and cash flow statements are very vital to prepare this financial statement. That means financial statements shows this statement: income statement, owner's equity statement, balance sheet and cash flow statement. So here vital elements of economic communicating economic events is accounting ability to analyze and interpret the reported information. Analyze and interpret. That means the accounting report. This accounting reports, just for this accounting reports, we need to be analyzed and interpret. That's why analyze which one? Analyze, that means various ratios, percentage, graphs, charts, or highlight significant financial trends and relationship. For this we need to be analyzed the report and interpret of the reported information. Interpret, that means here meaning the uses, the meaning and limitations of reporting data. Interpretations involve explanation of the uses. Here we need explaining the uses, explaining the measures and limitations of reported data. Now, bookkeeping accounting basic difference. Bookkeeping basically, usually bookkeeping usually involves only the recording of economic events. Apparently we can see involves accounting involves the entire process of identifying, recording and communicating economic events. Already we have discussed on these points broadly: identifying, recording and communicating economic events. Okay. So here also we can say bookkeeping is the primary recording and accounting is the secondary recording. And in bookkeeping we do not follow any gap or IFRS, but in accounting process we must follow IFRS or gap. Here who uses the accounting data? This is very much important matter. Internal users. That means when we prepare the financial statement, this financial statement must be prepared by two parties: internal parties and external parties. Who are internal parties or internal users? Finance department, marketing department, management, or human resource department. Here this is the university, the finance department, they must see the financial statements, or the marketing department, those who are collecting the information, or students, they can use this, or the management, the owner of the company, owner of this university, they he or they can use this information. Like human resource department or another parties we call why they use this information for planning, organizing and running the business properly. Or managers who plan, organize and run the business, they use this information. And who uses accounting data? External users. External users, that means investor, creditors. Okay. Creditors or investors. Thus, they can use this data, or taxing authorities, regulatory agency, customers, labor union. Okay, they can use this data. Why they use that means investors use accounting informations to decide whether to buy, hold or sell ownership shares of the company. That means they can buy the shares, they can sell the share, they can hold the share. For this purpose they the internal users, that means, sorry, external users, that means the investors, they can use this information. And the creditors means such suppliers or bankers use the accounting information to evaluate the risks of granting credit or lending money, whether they will lend the money or not. Just after analyzing the financial statements, they decide it. That means whether they will grant any loan or not, they will approve any loan or not. Okay. And this is the taxing authority want to know whether the company complies with the tax law, or regulatory agency want to whether the company is operating within its prescribed rules. The customers are interested to honor product warranty, support its product line. A labor union wants to know whether the owner have the ability to pay increased wages and benefits. Now we will discuss accounting equation. Accounting equation very much easy to understand, I think. Here asset equal to liabilities plus owner's equity. That means basic accounting equation provide the underlying framework of reporting and summarize economic events. Assets are claimed by either creditors or owners. That means assets, these assets claimed by either creditors, that means the liabilities, and the owners. Suppose assets 10 taka and owner's equity suppose 7 taka. So 3 taka, this is the liabilities. When the company winding up, that times the liability must be paid first, and then The residual amount we call this is the 10 minus 3 equal to 7. This 7 taka is owned by the owner of the company. So in a business, liquidated claims or creditor must be paid before ownership claim. That means here the creditors claim to creditors must be paid. If the creditors claim any amount must be paid before ownership claim. Before ownership claim, we will pay this. And debit credit rules. Actually, debit credit rules we call in asset increase debit, asset increase debit, asset increase debit, expense increase debit, or owner's drawing increase debit. On the other hand, liability increase credit, owner's equity increase credit, and revenue increase credit. So here asset, that means if the business received or purchased any asset that must be shown in the debit side. In asset decrease, that must be shown in the credit side. In expense, if expense increase, that means salary expense, wages expense, rent expense, mobile bill expense, all expenses must be shown in the debit side. This is increase. Or on the other hand, just decrease credit. Owners drawing debit. If owners of the organization draw any amount, we will show this amount in debit side. On the other hand, if the owner uh, again pay any amount, we call this is the credit side. That means debit means increase and credit means decrease. Owner's drawing, that means this drawing must be increase, and drawing increase debit and decrease credit. Liability, and here the asset, expense, and owner's drawing, that normal balance debit. Normal balance debit, suppose here asset 100 taka and credit suppose 10 taka. So normal balance will be 90 taka. This must be debit balance. This is normal balance debit. And here liability increase credit. Here all liability increase credit, equity, owner's equity increase credit, revenue increase credit. And here normal balance is debit balance. This is the debit credit rules. And if liability decrease, that must be debit. Suppose credit purchase or furniture purchase on credit. So the liability will be here. Suppose 1000 taka. Suppose 1000 taka. 1000. If we pay this amount, suppose 50% we paid after 1 week, 500 taka. So this 500 taka is decrease, and for this must be debit. And owner's equity, the same matter. If the owners invest any amount in the business, that must be credit. If he withdraw any amount, that must be debit. And revenue, sales revenue, rent revenues, sales returns, etc., or dividend, all revenues must be credit. And if revenue decrease, that must be debit. And now we will discuss fiscal year and calendar year. Actually, fiscal year accounting time period, that is 1 year in length, or calendar year, fiscal year, that is begins July 1 and finishing date 30 June. And calendar year January 1 to December 31st. Now complete the steps in accounting cycle. Actually, in accounting cycle we have 9 points. First one, analyze business transaction. Number second, journalize the transaction, post to the ledger account, prepare trial balance, journalize and post adjusting entries, prepare the adjusting trial balance, prepare financial statements, journalize and post closing entries, prepare post closing trial balance. So all today, thank you so much for participating in this session.